Good morning, everyone. This is Marshall Giller bringing you the morning comment for September 18th. Well, this has to be one of the biggest days I can remember ever knowing about in advance in my career. Sometimes you get days with huge shocks, but rarely is there so much that's on the schedule. Let's take the three main points in chronological order. First up, the FOMC decision. The FOMC kept its considerable time statement, but the key point was a sharp rise in the median Fed funds forecast. The likelihood of higher short-term rates pushed the dollar higher against every currency that we track, even though Yellen said there hadn't been very much change since the outlook in the outlook since June. Significantly, she also signaled her approval of the ECB's attempts to jumpstart the Eurozone economy, even though that's likely to weaken the euro. Secondly, the targeted long-term refinancing operations. ECB today will hold the first of 8 planned loans of cheap long-term money. Today's targeted LTRO will allow banks to borrow up to 400 billion euros for 4 years at 15 basis points. ECB hopes to reverse the recent contraction in its balance sheet and so convince the market that it's determined to prevent deflation. The fact that this is likely to weaken the euro hasn't escaped them either. The bigger the take-up of the loans, the greater the impact on the euro, in theory. However, everyone will really be focusing today on the Scottish referendum. All the latest polls have shown the anti-independence no side winning, although the gap was within the margin of error for the polls, and there are still a lot of undecided voters. On the other hand, although the polls are extremely close, the betting isn't. British bookies are making 2-9 for no, indicating that bettors strongly believe that the results will be a vote against independence, while the odds of a yes vote are put at an unlikely 15-4. Market positioning is also heavily in favor of a no vote. This means the market reaction to a no would be much less than the reaction to a yes, which would probably be pretty dramatic. We should start to get exit polls after the polls close at 2200, 10 p.m. local time, and the final results will be available early tomorrow morning. If there's a no vote, as is clearly expected, I'd expect to see an immediate relief rally in cable and all the sterling crosses. The response isn't likely to be euphoric, however, as much of the rally has already occurred since the stunning rise in the yes vote stalled a week or so ago. But, if the vote is yes, well, Britain faces a period of absolute political chaos and the pound would probably plunge. The euro could also be hit due to the implications for Spain and the likelihood that the UK would leave the EU. Other events today, in Norway, the Norges Bank meets, and in the US, we have housing starts and building permits for August and the Philly Fed Index for September, plus the weekly jobless claims. But, as Albany said, that's but a trifle here. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.